Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting briefly with the Asian shares and what actually happened over there. They remained under pressure on Wednesday as a nuclear test by North Korea heightened concerns for investors which are already frightened over the slowdown in China. Reports emerged for about 5.1 magnitude earthquake in North Korea, near a nuclear testing site. North Korea's state-owned television, however, later confirmed that the country conducted a successful hydrogen nuclear test. And of course, they said that they won't give up nuclear capabilities unless the US drops its hostile foreign policy towards the country. Major Asian markets ended the session in the red, with the Nikkei 225 index, which was down about 182.68 points, or about 0.99%, while of course the Australian S&P 200 saw about 61.3 points, or about 1.18% fall. China, however, bucked the trend as the Shanghai Composite Index traded about 2.1% higher as investors sought safe haven assets and investments like the Japan's currency. The yen, considered as a safe haven harbor, was up against the dollar, with the dollar's yen pair trading at 118.59 compared with around 1.1815 before the news on North Korea. European markets as well opened lower on Wednesday as geopolitical risk posed by North Korea's latest nuclear test and geopolitical tensions in the Middle East increased uncertainty over the whole continent. The pan-European stock 600 was about 0.2% down. Of course, the euro stood slightly higher, around 1.0766, which was down 0.8% since the yesterday's drop. The reinforced expectations that the European Central Bank will have to add further monetary stimulus to avert deflation will further drive the euro down. The British pound also extended its losses, pressured by the risk of a destabilising referendum expected later this year, as of course this is whether to stay in the European Union or not. Having hit a 9-month low of 1.4638 overnight, the unit stood at 1.4659 in early Asian trade. British Prime Minister David Cameron on Tuesday reaffirmed a pressure to allow government ministers to campaign to leave to leave the European Union in the upcoming referendum, heading, of course, of prospect of multiple resignations from his top team. In the commodity sector, gold rose for the second straight session on Tuesday after a wave of risk aversion due to growing worries in China and, of course, the rising tensions in the Middle East that triggered demand for the metal. Despite the stronger US dollar, of course, gold was up 0.3% at 1078.30 an ounce. On Monday, it has rallied about 2.2% to a 4-week high of 1083.30. After data, of course, showed China factory activity contracted for a 10th straight month in December. Oil prices in the energy sector on Wednesday, they gave earlier gains retreating from 11-year low as concerns over growing supply and rising stock levels outweigh tensions between key Middle East producers. U.S. crude for February delivery was 13 cents higher at $35.72 a barrel in early European trade, after, of course, slipping 79 cents in the previous session. Crude oversupply is still in play. However, the deficit between demand and supply is getting smaller. In the calendar today, the most important events are 13:15 ADP employment change from the US, and of course at 1900 FOMC minutes. That's all for today. Stay tuned. See you next time. Bye-bye.